Okay, so right now I'm going to launch a poll real quick that I would love for everyone to respond to as just as we wait to get started. Okay, and yes, it's just a one question poll. If you can respond to it. Um, okay, no talking. Okay, waiting for a few more responses. Thank you. Think about. Okay, one more. Awesome. As you come in, just a quick note, there's a poll that is live right now. As you come in, if you can, please just respond to the poll. It's just a one question poll. If you can respond to it. And in the next 2 minutes, we'll get started. Just so you also know, we are being recorded currently, and then we are going live on Facebook as well. Okay. All right. I think at this point, I will hand over to Barbara, and then we can get started. So Barbara, you can take it over from here.
Okay, all right. If I want to just make sure everyone is muted as they come in. It is so great to see you all today. I want to first of all thank the host of this small business webinar, which is VBM Community Outreach under the directorship of Pastor Christopher Pryor. And I also want to thank our sponsors, because we know as business people, sponsors are very important. So we want to thank today CRA Forum, Bankers Forum, for sponsoring this event. And so they're very important. I'm excited to be here with you today. Excited because I know that it's extremely important for us to, as business owners, to get information. And a lot of times, you heard the credit reports, the people from the bank on Monday, Dave Brown and Sheila Braddock and some others talk about the importance of credit in business and the reasons why some small businesses were not eligible to apply for some of the loans and some of the funds that are currently available. And we had a great presentation by Kwame on yesterday in reference to the accounting piece. So we don't have a lot of time today. So there are a lot of things that I could go over about talk about the legal structure, but I'm going to limit that. And I'm going to repeat a couple of things that he said, but for the most part, I'm going to stick to the legal and leadership in reference to the business. So I'm going to share my screen with you, and we're going to get started. All right, so today we're talking about leadership in the law and a strong foundation for your business. What I do is I help entrepreneurs to connect the dots in business and in life to negotiate their best outcomes. So that is what I do in my daily walk. My background, I'll just give you a little bit. Most of you know me, but I'll give you a little bit of background because I believe that it's not only important what you learn, it's important who you learn it from. My background is I have a BA in speech pathology and audiology from South Carolina State College. I have a Juris Doctorate degree from the Ohio State University College of Law. I'm licensed to practice in Michigan and Pennsylvania. I've had 30 years of corporate legal experience, practiced in-house general counsel for insurance company and many other companies over the years, including my own law practice. And I have over 25 years of corporate governance experience. I'm an executive director and faculty with the John Maxwell team, and currently CEO and founder of Purpose by Design, which is a professional development company, and B. Littles and Associates PLLC, which is a law firm. So the objectives today for this workshop is to help you identify steps in the corporate formation process. Now, a lot of what I will be talking to today is applicable to Michigan. However, there's plenty of information in this presentation today. Yes, Kwame?
I'm sorry. I think we are not seeing the presentation screen. Just so we see the slides, but we are not able to, because I see you on the objectives, but what we see is just the leadership and law strong foundation for business, the first slide.
Did you see that slide change?
No.
You need to go on presentation mode.
Thank you, Tip. Let me stop share and go back.
Awesome.
Can you see it now?
Yes. Yes.
Can you see that?
The screen is not being shared now.
Hold on.
I think you want to do play from start.
Play from start. Yeah.
Well, that's what I had initially. Initially, that's what I had. Can you see it now? That's what I had from start. From the start.
Do you have are you using two screens?
Click it again. There you go.
Yes, you got it now.
Yeah. Can you see the screen?
Yes.
Yeah.
Okay, thank you. Yeah, I had it in play from start to beginning. So for some reason, I think Kwame's dropped out yesterday too, someone told me. Thank you, Kwame. So yeah, just step in if something happens. So I'm gonna help you identify the corporate formation process, explore the corporate entity options, oversight of corporate entities, the role of the IRS versus the state of Michigan or any other state in the formation process, and maintaining corporate status, and then leaders' responsibility in business. Because if you are going to have a small business, you have a responsibility as a leader to lead in your business. One of the things that I always tell people is you have to begin with the end in mind. So begin with the end in mind when you are doing business. First of all, are you building a business for sale or for legacy? You should identify that from the very beginning because it really does have an effect on the types of the way you set your business up, the way you think about your business, the way you move through your business. You know, am I going to sell this? Am I looking to sell it in 10 years, in 5 years? Or am I going to keep this business and move it into legacy for my children, my children's children? Why am I creating the business? The other thing is, will there be others with ownership interest in the business? And if there are, what is their marital status? Now, I ask that because we know that the divorce rate is over 50%. And sometimes, and I've had clients who have come in over the years, and they ended up with a partner they did not want because their business partner died, and they ended up with the spouse as a partner because they had not taken that into account and made any provision for it when they initially put the business up. Decide who will be the resident agent. That's the person who will deal with the IRS, who will deal with the state, and any other legal matters, administrative matters will be the resident agent. That's the person that they will contact. And also make sure, as I said, if you're going into business with others, make sure that you have a shareholders agreement. If you have a C or S corporation, if you have a partnership, and if you have an operating agreement, if you have an LLC. And why is that? Because it's very important for you to identify who the partners or shareholders are, and what the responsibilities of each are, and what happens if there's an exit. And most people, come in and they start out by saying, this is my friend, or this is my family. Even if it's your family or friend that you've known for 30 years, you need to have a shareholders agreement. Years ago, I had a case where I had a family come in, and there were 3 members of the family and one other person who was not blood related, but they had begun working in the business, and they were all going to be partners. I put up their corporation, but they did not want to pay for the shareholders agreement. Now, at that time, the shareholders agreement was about $2,500. In a year, that company had become a $1 million business. They had extreme success in that year. They became a multi-million-dollar business. The problem was, at that point, there was some contention within the shareholders, supposed shareholders. And so they come back into my office a year later. They said, we're really embarrassed about coming back into your office. We truthfully, Barbara, we've seen another attorney. We talked to the attorney, but we haven't really made much headway. So we decided to put our ego aside and come back and see you, because we know you told us to do a shareholders agreement when we first started. But what has happened is, then the sisters and brothers, the 3 came back into the office. The one person who was not blood related was the person who was saying he was a shareholder or a partner. And they were saying, no, he isn't. And so that case they ended up spending over $30,000 in legal fees on that case, which ended up having to be settled because what the person was doing actually really put him on the level of a partner, and there was not a shareholder, and was nothing in writing to say that he wasn't. So you have to make sure that you're planning from the beginning, and really, sometimes when you go in and you have legal fees for certain things, and I'm the type of person, I will tell you what you can do on your own, but I will tell you what you need an attorney for, just as Kwame did yesterday in reference to the accountancy piece, what you need an attorney for, and what you need to pay for if you have a business and if you are going to enter business with other people. You have to have a shareholders agreement or operating agreement or a partnership agreement. 2, define your exit from the very beginning. I know we think that we're going into business with other people and we're going to be in business forever with them. And that may actually happen. We may end up, being great friends and being in business till that business ends. But many times, most of the time, that doesn't happen. There's one person, 2 people, or whatever that decide to exit. The time to decide how to exit is not when it's time to exit. The time to decide that is at the very beginning. Next, you want to identify the process or the status of ownership of the partner share upon death or divorce. Because like I said earlier, I've seen people who ended up with a partner they didn't want because there was a death or a divorce, and that was not taken into account, and it was not in the agreement when they first started out. Be clear on the vision about how you are building, including the withdrawal of money from business. I've found that people, a lot of times who work together, have different ideas about when money's going to be withdrawn from the business and how when they're going to spend money. And I've had people who have come in again, and one person says, no, we need to leave the money in the business for the first 5 years. And the other person says, no, I need to take a withdrawal because I need to live on this money for the next year or two. So you have to be clear on that. Be clear on the duties of each person. What is each person responsible for? Because if you don't, you'll become really upset about with the person that you actually are dealing with. Best practices in establishing your business, and Kwame mentioned these the other day. Establish a separate bank account from your personal account, even if you have not yet established your corporation. If you have not put up a business entity, still make sure that you have your finances separated. Take your articles of incorporation to the bank to open a business account. They are going to ask you for the articles of incorporation. Most places will not open up a business account unless they see the articles of incorporation and they see that you are actually a business. Keep all receipts for purchases related to the business. And here I'm really referring to some people will have expenses and they'll make purchases before they even put their business up. I've had people who've come in and they haven't established their business, and they've had people lending money, putting money giving them money for the business for a whole year. And there's no documentation of it. Keep records for work you've paid people to do within your business. And that's obvious, but I'm talking now about even before you have actually incorporated. Avoid signing legal documents such as leases, contracts prior to establishing your legal structure. Generally, you want to eventually move to the point where you don't have to necessarily guarantee all of the leases and contracts in your business. Now, when you're starting out, the bank, the lender, the landlord, they're going to ask for a personal guarantee. And that's why we were saying on Monday how it's important for you to have your personal finances in order when you're establishing a business. You don't have to let that stop you, but you need to get those in order. Do a local search to see if a business name is available with the state, and check to see if the domain name is available. You can use GoDaddy. There are other domains where you can find the domain name for your website prior to getting an EIN, business card, stationery, etc. I've had clients who have come in and they have gotten their business cards, they've gotten EIN, they've gotten stationery, they have brochures, and they never checked the business name to determine whether that business name was available. And I've had several clients over the years who had to go back and redo all of their documents because the business name was not available with the state. The domain name that they had put on the brochures was not available. So make sure that you do those things first. We get excited. We get excited because, we're starting our business. But make sure that you check those things first before you spend money printing, stationery, cards, etc. If the name is available and you're not ready to incorporate, let's say I'm not ready to really do my business right now, you can reserve the name for 4 months for a small fee with the state. However, you should purchase the domain names, whatever your website name is going to be, you should purchase that immediately. The other thing I tell people, if you are going to have a name that you're going to use outside of your personal name, you should make sure that you have purchased that name, but also purchase your name. So my company is Purpose by Design. I branded myself, Barbara M. Littles. I have barbaramlittles.com. And I also have purposebydesign.com. So make sure that you've taken your name. What's happening a lot is that people are purchasing domains and they sit on their names. So let's say you really want your name in a business. Somebody can purchase your name or purchase a name and sit on those names and wait for somebody to really want that name. And if you've gone out and you've used that name and you've branded that name, you really want that name, they will make you pay them for that name. I had a friend of mine in business who 2 months ago got a $2 million offer for a name. It's a name that he's been using. And we're going to talk about focus and clarity in your business. But this name is a name that he's been using that he's had for the last probably 11 years. And his partner said, sell him the name. It's $2 million. My friend said, no. will not sell them the name, because the name for him, he said, was so critical in his business, it ran through everything in his business. Now, you have to have a lot of confidence in your business and what you're doing and clarity to turn down $2 million for a name. But that's how important a name can be. Keep documentation of the money invested in your startup, when it's given, by whom, and expectation of repayment, if there is an expectation of repayment. Put everything in writing. Do you have personal property you plan to use in the business? Ask yourself those questions. If you go to BarbaraMLittles.com, there is a free ebook there called A Hustle or a Business. And which are you running? Now, a lot of people use hustle very freely. They say, "Yo, that's my hustle," and they're referring to their business, and they're very structured. But then there are other people who, it's a hustle. I'm not incorporating. I'm not thinking about a business structure. Know which one you're doing, because if you're running a business, you have to have your corporate structures in place. You know, like Kwame said on yesterday, it's not so much that you can't make money without your corporate structures in place. It's not that. It's not that you can't put your product into the market without your structures in place. It's not even that you can't grow your business somewhat without your corporate structures in place. The problem is when you do grow. I had another client over the years that walked into my office, and the Internal Revenue came to him and said, we want payment of some back taxes. And they were payroll taxes. And I'll talk about a little bit about the bankruptcy and payroll taxes in reference to corporations, but they wanted him to pay like $1 million in back taxes for payroll. Of course, you know, he didn't have $1 million sitting around. So what they said was, let us see your corporate books. Corporate books being your incorporation papers, where you incorporated. We want to see your minutes from your meetings for the last 11 years. They wanted to see all of his corporate documents. And the reason they want to see those corporate documents is because they want to determine whether or not he actually had a business. You can actually be registered as a business with your state or your province or wherever you live, and the Internal Revenue Service comes in and says, we are piercing what we call piercing the corporate veil, which means we don't consider you a business because you have not operated as a business. And so now we're going to consider that everything that you've done really has been personal. So all of the tax advantages and everything goes away. So he ended up having to come up with $1 million to pay the IRS, and he had to go back. He had to get a law firm to go back 11 years and do corporate minutes for his business. You can't imagine how much that costs. What I'm saying to you is that there are some things it's better for you to pay up on the front end. You know, I tell people, pay up on the front end because it always costs you more on the back end. It always does. So I'm going to talk to you about a couple of corporate structures. I can't go into a lot of detail, but enough for you to know. You know, a lot of people say what you don't know won't hurt you. Really, what you don't know absolutely will hurt you. Okay? So the limited liability company is very popular now. It's formed under, it's a Michigan MLC 450-4101 in Michigan, governs the formation and operation of LLCs in Michigan. It's kind of a cross between a partnership and a corporation. And I'll explain that as we go along. And it combines some of the favorable attributes of both, basically mostly in management and taxes. The governing document for an LLC is called an operating agreement. The governing document for a corporation, a C corporation or S corporation, is called a shareholders agreement. The LLC in Michigan can be a single member LLC. So if you're a solopreneur and you want an LLC, you can have an LLC in Michigan. In some places, you cannot have a single LLC. It has to be, you have to have members or partners in the LLC. Now, Michigan corporations, the three most popular are the LLC, the C corporation, and the S corporation. Now, most people will decide, if you go to a good attorney or a good accountant, they will ask you about your intentions for your business, not just what is the easiest thing to put up. Some people say, well, you know, I'm just going to put up a LLC because that's the easiest thing to put up, at least in Michigan it is. But that's not how you decide. Yes, it's a consideration, but that's not how you decide what your corporate entity is going to be. That's very short-sighted. You need to determine where you're going in your corporation, where you anticipate going, whether you plan to go to a bank to get money. But most people, small businesses, are okay starting out with an LLC or S corporation. The S corporation is taxed differently. So a lot of people use that because there's a tax advantage to it. However, if you put up your corporation, you establish your corporation with the state, okay, you file the corporations with the state, whatever state you're in, that corporate, and in Michigan I'm talking about right now, that corporation is a C corporation unless you opt in to being an S corporation. And how do you opt in? You have to file the S corporate document with the Internal Revenue Service, because otherwise you're going to be a C corporation and you're going to get double taxed on the entity and on the employee revenue inside the corporation. For Michigan corporations, you need corporate bylaws. Those are the documents. You need the Articles of Incorporation, which establishes a corporation. And then you want to have bylaws that includes provisions for the regulation and management of your business. Now, if you don't produce, you have to have the articles, because the bank's going to ask you for the articles, and that's what incorporates your business. Some people don't, they don't look for, they don't do bylaws. The problem with not doing bylaws is kind of like having, it's kind of like dying without a will or trust. If you don't decide what's going to happen in your business, guess what? The government will decide for you. So remember, just because you don't have documents in place, it doesn't mean that there are not rules that will govern your business, whether or not you have those documents in place. For example, in Michigan, there's a Michigan Partnership Act, there's a nonprofit act, and all of those things will govern your business if you don't have those things in place for yourself and make your own decisions. And you want to be able to make your own decisions in reference to your business. Since we can't go over everything today, I want to go over the things that I've seen over the years that have caused people the most problems. And I'm sorry, Kwame, could you check and make sure that there's no one in the waiting room? I just want to make sure. Okay. So you want to make sure that I want to give you some information on things that have caused people the most problems. Because I've litigated corporately for over 25, 30 years, there are certain things that have come that have been very common in reference to corporations where they run into problems, or small business where they run into problems. One has been assumed names, because a lot of people don't understand an assumed name. An assumed name is a name that you use outside of the name that you have established with the state and with the IRS. So people may decide, I may decide, for example, my corporation name is actually B. Littles and Associates. The name that I use is Purpose by Design. Purpose by Design is an assumed name. It's a DBA, doing business as Purpose by Design. That document or that information has to be filed. It has to be filed in your county. It has to be filed with the state. It has to be filed with the IRS. They have to know that you are using an assumed name. Now, if you plan to do business with an assumed name, make sure that you file the certificate of assumed name. It maybe call something a little different in your state, but it's an assumed name for wherever you live. Now, this is where people get off, because sometimes people think if I file a DBA, doing business as, then I'm incorporated. You are not incorporated. You have just filed a DBA. What incorporates you is when you file articles of incorporation with the state that you are in, and then you'll file, the DBA. The other thing that about assumed names is the rule of assumed names applies even if you use the name omitting only Inc. or Incorporated. So let's say my business name is Purpose by Design LLC. And I use on all my documents Purpose by Design. I leave the LLC off. I use Purpose by Design. Purpose by Design is an assumed name. If you use a name that's not exactly the way it's incorporated, it's an assumed name. And a lot of people don't really recognize that they're using an assumed name. And why is that? Because the government wants to know that they can track you down, that you're not out using all different types of names, and they can't track you down. So they will make sure that if you are a corporation and you use Inc. and you decide that's the way you're going to name your corporation, Barbara Littles Inc. or whatever, you cannot write out Incorporated. That's a different name. Even though Inc. means incorporated, it's different. If you do a LLC and they ask you on your incorporation papers, are you doing LLC with no periods in between? Are you doing LLC with L period, C, LLC, L period, C period? If you're not, hello? Hello? If you're doing an LLC and you write it differently, you are using an assumed name. So make sure that however you incorporated your name, that's how you're using it. If not, then you need to file a certificate of assumed name. All right? So I want to make sure you know that, because a lot of people don't know that. They come in, they think they are incorporated, and they're not, because they've filed an assumed name, and they think that I can use incorporated even though I filed as Inc. And you really can't. You're really in violation. The other thing that I get a lot of questions on is the EIN. And it's the employee identification number. And a lot of people ask, well, I have a corporation, I have a business, and I want to use the same, I'm going to put up another business, I want to use the same EIN. I'm going to advise you to check with the Internal Revenue Service. There are times in which you can use the same EIN number, employer identification number. There are times when you cannot. A new EIN is generally required when the following organizational changes occur. When you go from a sole proprietorship and you incorporate. When you have a partnership that incorporates. When a corporation changes to a partnership or a sole proprietorship, or a sole proprietorship takes in partners and becomes a partnership, or a partnership incorporates. I have that on there already. But in those situations, you will need to have a new EIN. The other thing is that question that I get that's very common, if you are doing two different types of businesses. Let's say you own real estate and you acquire real estate, you flip houses, etc. And let's say you have 50 houses, okay? And in addition to that, you do another type of business. And in your state, you're allowed to put those in the same corporation. I don't advise people to put all of that in one corporation, because that means that if you put a high-risk business or high-risk activity in your corporation, then all of the money in that corporation is subject to whatever happens with any of it. So if I have 50 houses, and let's say some of the houses I lease out, and some of the houses I do something else with, I would not advise you, and this is a personal decision, but I don't advise people to put their everything in one corporation. Because if I have 50 houses and I have a major issue that happens on one or two, or it's a high risk activity, then that means I'm subject. My whole corporation is subject to whatever happens with any of those businesses. The other thing that we see a lot of, I've seen a lot of over the years, is when a person has a bank account, of course, and they're using their personal bank account for a business, which we've said not to do, but we have people that end up doing it. You use your personal bank account, and let's say you have a joint account with your spouse, and you have an issue that comes up. Your spouse is not involved in your business. However, all the money is in that account. If that account is attached, then your money is at risk. All of your money, your assets are at risk. And I've had people who have filed as an innocent spouse, and sometimes they were able to get, their money back, or they had to show that some of that money that went into the account was not as a result of the business. But at that point, it's so messy that you can count on losing the money. So I want to say this: in business, you have in life, the most difficult person to lead is yourself. I know for me, it's hard for me to sometimes lead myself in various areas of my life. But you have to self-lead if you're in business. If you are a business owner, you must lead in your business. You cannot say, you know what, I like baking cakes and I bake all the cakes. I don't know anything about my business and I leave that up to somebody else in my business. No, you could have somebody that you have delegated primary responsibility to, but you need to know what's going on in your business. And I'm surprised the number of people who don't know what's going on in their business. And even when they come and, you know, they're in the marriage and the business, something happens and they're withdrawing from the business, getting divorced or whatever, they have no idea about tax returns. They have no idea about what's happening in the business. They have no idea that some people had no idea that their business was even being sued because they had a person that they delegated to be the resident agent and they don't sit down to go over, okay, what's happening in our business this month or this. You cannot check out of your business. Everyone, please mute yourself. You cannot check out of your business. You have to stay in your business. Consider where your name is attached. Never leave a business without properly withdrawing. This has been another source of litigation over the years where, let's say I had 3 people that were in a business, or even 2 people that are in the business. One person, or they decide, you know what, I'm out, I'm leaving the business, and they just walk away. They just stop participating in the business. If something happens in that business, you're still liable. So you have to properly withdraw from the business. And that should be governed by your partnership agreement. If you don't have one, then there is probably, I know in Michigan there's probably a partnership act which determines what's going to happen in that business. But you're going to be liable if you don't properly withdraw and have documentation. Even if you delegate responsibilities to someone else, make sure you know what's happening in your business. You must self-lead. Now, I wanted to go back and just mention this in reference to C&S corporations in terms of board of directors, because when we talk about self-leading and knowing what's going on in your business, if you are C corporation, S corporation, you have to have a board of directors. And the purpose of the board of directors is to oversee the what's happening in the corporation. It's kind of your checks and balances. You need to follow corporate formalities. So don't go out and just pull people in to be on your board of directors. I'm calling my mama and my friend and my daddy and my brother and sister. No. What attributes do they bring to your board? What talent, what information, what skill set do they bring to the board to be able to assist you? I personally, if a board is large enough, I'd like to have, quite frankly, legal counsel. I like to have someone who, not legal counsel to the corporation because of conflict of interest, but they at least know something about the law. I'd like to have someone who knows something about business, someone who knows something about finances, marketing, depending on what my business is. So make sure you follow the corporate formalities or your corporate veil will be pierced, as I talked about earlier. The IRS will determine you are not a corporation. So if I were to ask you now, for those of you who are incorporated, if you are a C or S corporation, where are your corporate records? You should be able to direct me to your corporate records. And in your corporate records, I should be able to see when you put your business up. I should be able to see when the board elected who the bank is going to be. I should see a resolution in there in terms of who has the authority to sign contracts for your business. I should see in there any policies that you have in reference to your business that have been approved by the board of directors. You cannot have a board of directors and then operate as autonomous, even if you're the chair of the board. So you have to remember that. You have to have maintained minutes. I don't care if it's a paragraph. And what I would say to people is, even in writing minutes, there's a way to write minutes for boards. There are some things that, you know, I've read minutes where people have 10 pages of notes for their board. You have to put enough information in there where I can understand what you're talking about if there's a third person looking at that. But not every single word that's said, like, you know, Gail said this and John said this and so-and-so said this. No. So make sure that you kind of know how to record when you're even recording minutes. Understand your responsibilities as a board member. I know that it is flattering when people ask you to be on their board, okay? to be a board member. But you need to understand what your responsibilities are. You have a duty of loyalty. You have a duty of making sure that you are responsibly dealing with that corporation. You cannot be self-dealing in the corporation, doing things that's to benefit to you. So you need to make sure as a board member that you understand. For people who are on nonprofit boards, okay, understand this. Who rules nonprofit boards? Department of Justice. So you can have criminal activities attached to boards if you don't really know what you're doing. So I would say, get some advice, read up on it, find out what is it that's required of me to even run this board. It does not have to be complicated, but it has to be clean and you have to know what you're doing. All right? One of the other areas that has been a big source of litigation has been employees versus independent contractors, because we all want to get out of paying taxes and as little as tax as possible, but we want to do it in a legal way. And so sometimes we'll call people independent contractors who are not independent contractors. And if there's ever an audit or review, you have a major problem. So let's just talk a little bit about the employees versus the independent contractor. The more control you have over that person and what they do when they come in, they're using your equipment, etc., more than likely they're not an independent contractor, they're an employee. And they don't become an independent contractor just because you say they're an independent contractor. It's what the IRS has determined is actually an independent contractor. So the more autonomy they have, the more so that they're independent contractor. Now, when I say autonomy, I mean I have contracted with them to provide a certain service. Within that contract, I have indicated certain things. I'm telling them how they're going to get paid. I'm not telling them you have to be here from 9 to 5. If I'm dictating the time you have to be there, that means you're not really probably doing business for anybody else. If I'm your only person that you're working for, it begins now to look like you're an employee. Even though I say you're an independent contractor, you are beginning to look very much like an employee. If I have the ability to tell you when you take time off and when you don't take time off, you're more likely an employee. An independent contractor says this: I will do this work for you and I will produce this work. I don't really care when that independent contractor does it, as long as it's done by the date that he or she says it's going to be done. Because that independent contractor, more than likely, if they're truly an independent contractor, they have multiple clients. But if you're the sole person, you exerting control over when they come, when they go, vacation days and all that stuff, they're an employee. Okay? You can run into problems there. Assure the person understands by contract that they are independent and responsible for paying their own taxes. And where this runs into a problem, let's say you have a person that, however you have designated them, they don't pay taxes. And you say they're an independent contractor. And the IRS comes to them and is looking for their money and saying, because you file a 1099 at the end of the year saying that they're an independent contractor, and the person hasn't filed taxes for 5 years. And the IRS goes to that person, and then they begin to do a trace. And they trace back to you. Now, not only are they looking at that person auditing their records, they are now looking to audit you, because they're looking to see how many of these people do you have that are actually employees that you designated independent contractors. So the people that you hire as employees, as independent contractors, really can cause you to be audited if you're not careful. Assure that you have a contract with them. And even though you have a contractor with an independent contractor, if you are treating them like an employee, they are more than likely an employee. You know what they say? If it walks like a duck, it talks like a duck, it's a duck. You can say it's a turkey, but it's a duck. Consider milestone compensation when you're dealing with independent contractors. So payment is made as work is completed and it's verified. Okay? And a lot of independent contractors get paid by project. You can have those that get paid, hourly, but a lot of them get paid by project. Independent contractors, you want to just not have them out there saying they're independent contractor and you're paying them and you have no accountability. So you have, even though they're not employees, you have to have accountability. Consider using milestone compensation in your contracts, which means payment occurs as work is completed and verified. 2, have accountability in your contracts, specifically outlined in the contract and tie back to their compensation. Redundancy is fine. Remember, you always have to have checks and balances. Okay? So, if you're going to do business, a lot of people do business and they're very good at what they do. The issue is they don't take care of the business portion of what they do. Some of the top legal issues that we have is failure to properly form your corporation, failure to follow corporate protocol after you have established your corporation, failure to establish checks and balances. If you're a corporation or a small business and you have no checks and balances, there are people who really don't have, especially if they have a partner, they may have one person that has access to the account. They don't have access to the account. People start giving money into the corporation when it runs into a problem. They start giving money into the corporation without their personal money. And I had a case recently where it was a major issue. Now the person is saying, you really were never a partner. You really are an employee. It can get really muddy really fast. Failure to acquire knowledge needed to run a business. I'm a believer in lifelong learning, whether you're running a business or not, but particularly if you're running a business. Ask yourself, how much am I educating myself each year on the business aspect? Not just on my product or what I do. You have to have knowledge on that, but you also have to have knowledge on your business, because your business will cause you, let's say you're selling syrup, or you have this product that's hit the market, the product is doing well, you're making money. The truth, nobody really cares much until you start making money. And you're making money, it's very unlikely that most people are not going to go back and then do their formation work. So you do that before you start making money. Failure to consider the management part of your business. I've seen this probably more so over the years than anything else. Just failure to not manage the business, failure to have appropriate agreements in place, failure to identify roles and responsibilities, and failure to ask the tough questions. A lot of times we do not ask the tough questions, particularly when we are going into business with someone we know, and whether it's a friend or whether it's a family member. You must ask the tough questions. I believe in doing due diligence. You need to know, if you're a small business and you're going to partnership, what is that person's credit like? Okay, are there any liabilities that are out? You need to treat it like it's a large corporation, even though it's your small business. Okay, because if you don't, you're gonna have major problems. As a leader in your business, you must have clarity, consistency, and focus. Clarity, consistency, and focus. Focus to me and clarity has to do with your vision. You have to know what you're about, where you're going. If you don't, as a small business, you will be a jack of all trades and a master of none. Now, I know that we talk about various streams of income, and we don't have time to do this today, but I will say this. I believe in multiple streams of income, but I also believe you have to master something. And if you're going to build a business, you have to master something in the marketplace. You cannot change businesses every month because people don't take you seriously and you have no credibility. So here are some resources for you. You can download Hustle or Business. Hustle or Business is about the 7 major legal mistakes to avoid in your business. And it includes information also kind of on estate planning and on trademarks that we didn't get to talk about today. Breaking Margins is a group. There's a waiting list now for that. And that's a group that I have that's for structuring your business for a profit. A lot of times small businesses are in business for 5 years and they have not made a profit. There's something in your business that you need to go back and look at. LARA, L-A-R-A, this is a corporation, securities, and commercial licensing entity in the state of Michigan, and the Internal Revenue Service, www.irs.gov. You can go there and get plenty information on independent contractors, what they look for, and other types of information. All right. So I know I went through that pretty quickly because there's a lot of stuff I wanted to share with you. But I will take questions now. Yes, the slides will be available if you have registered. I'm assuming obviously everyone on here is registered. We will forward the slides to you.
We
Okay.
had a few questions come through,
Okay.
and so I can get started. So the first one is, hold on, I just want to read it from the top. One second. It took my chart all the way to the bottom of. Okay, so we had a question on capitalization of your URL, the website, but I responded to that. So the next one, is it necessary to include LLC, etc. on your published material? That is letterhead, business cards, and all of that. So the LLC, is it necessary to include that on your business cards?
It is not necessary, but you then are using an assumed name, and so you need to file a certificate of assumed name.
Okay, thank you. What if you have a separate bank account for your business, but you use your personal credit card for purchases and then pay them with the money from your business and keep the receipt? Is that okay? Or do you need to have a separate business credit card?
All right. And I think Kwame went over this, so I'm going to let him chime in. My preference is if it's business, let it be business. You need to have a separate business. I have a separate business credit card. It's easy to track. It's very clean. Everything on there is business. Because if you start mixing business and personal, you're mixing business and personal, and then your account, you're probably going to run into major issues.
Yeah, and then I'll also say, even from the legal perspective, a little bit with the IRS, when you file your taxes and all, God forbid if you get audited, now you open up your personal life to the IRS. So you always have to keep your business really separate from your personal. So,
absolutely.
If your business is LLC, will you still need to choose between C or S? Maybe C Corp or S Corp. If your business is an LLC.
No. There are three. A C and an S corporation are actually corporations. Actually, an LLC is not a corporation, it's a business structure. So they're three separate things. You're either an LLC, if you have a professional license and you are using a professional license in your business, then you are a PLC or a PLLC. But the LLC is separate from the S corporation and the C corporation.
Okay. Have you seen examples where people have lost their business due to a board going rogue, or instances where board members try to control the vision of the business owner?
Absolutely. I'll give you an example. Steve Jobs. You know who he is? Who he was? He was the owner of Apple. Steve Jobs was kicked out of his own corporation. If you read, and I tell business owners, go back and read some really good business books. Steve Jobs is his book. I mean, the book on him is great as a business person. You have Bezos with Amazon, but yes, people run into problems with their boards because a lot of times people don't know how to run a board and how to even choose or invite people onto their board. And if you use or to have an articles of incorporation, you have articles of incorporation, but not have bylaws that they follow. And so when you do that, you can have people who run rogue on your board. So you have to be able to control that, and you basically control that by use of your bylaws. A lot of people, what they do is they go and get bylaws, and I do not recommend this. You go and get bylaws, and they're canned bylaws. You have no idea what those bylaws say. If I were to ask most small businesses who have bylaws, they have no idea what the bylaws say. That is dangerous. It is absolutely dangerous. So, yes, you'll run into rogue board members. You need to know, how do I remove a board member? What do my bylaws say about how I remove a board member? Do I have the necessary number of people on the board to remove the board member? I've worked in corporate America for many years, and one of the things that I know for boards that run really well is that the chairman of that board or the person in that company never took anything to a vote in the corporation without knowing that he or she had the number of people to approve that. So it's a conversation before the conversation.
Okay.
Yeah.
Thank you. Before the next question, I just want to say this. Please put the number 1 to 100. I have a number in mind right now, and then we'll pick somebody. The next question, is there an issue if your business name is available in Michigan, but being used in another state?
Well, you can use it in in Michigan. It's not a problem. Now, if you go to Facebook, for example, and you look up at some names, you may see the same name or similar name in 5 different places. Okay. Now you have to decide whether or not you want to use that name, even though you might be able to get it in your state. Is that a name necessarily that you want to use? We did not get a chance to. Please go get the ebook. We did not get a chance to. It's free. We didn't get a chance to go over even trademarks or copyrights or any of that. But all of that's important in your business, in terms of your product, in terms of your logo, in terms of all of that. If you have it's not necessarily a problem. If you want to have your business so that it's well branded. I mean, when you think of the arches, that's McDonald's. Okay. So you want to make sure that you at least have your business is really well branded. And you may run into a business that has the same name, or a similar name. But you can still use it in your state as long as your state clears that name. The question is whether or not you want to do it, depending too on how confusing it is. I always ask people to do research and find out, how often that name's being used. You can go Google it. You can go to Facebook. You can go a number of other places to find out how often people are using a similar name. But the one that gets branded well is the one that's going to prevail, no matter how many people are using the name.
Awesome. So those are, yes, I think that you answered this one. Will the slides be available? You did answer it. At this point, the number I was thinking of is the number 13, and the closest is Stacy with 7. He is our 6.
Congratulations, Stacy.
Point. So I'll make sure that I relayed that to Pastor Chris. He had to jump off, and then I think I have your email, Stacy. But if I don't, you can just quickly send an email to me, and I'll make sure we relay that with Pastor Chris, and your gift will be sent. Thank you, guys, everybody, very much for coming on today. I loved the session because especially the employee versus contractor, because I work with a team of people too, and we've done independent contractors, but it's one of those things that I think helps me think through as I grow the business, how I want to structure my co-workers and how we can establish it in a way that doesn't create conflict and don't get myself in trouble. So there's a lot of great content. We will for sure send a slides out. Tomorrow we do the strategies for business growth, a pretty exciting session. And I know that even with that, I'll have to have a conversation with Barbara because there's a lot of thoughts process that came as we're going through today's slides. Thank you all for joining. You want to give the last words, Barbara, and then we jump off?
Yeah, I just want to thank everyone for coming today. It is a great time to do business. I think it's the best time to do business. We're in the middle of COVID, and we're going to come out of COVID. And let me say, there are a lot of opportunities that are available on the other side of COVID. The issue is whether or not you're going to be prepared. So use this time in your small business to get prepared. I want to thank all my friends. I see people from Barbados on the call, from Washington, D.C. area, Maryland area, from Michigan. And so it's really great. It's from Chicago. So it's great to see you all on the call today. But it's the greatest time to do business. There's a lot of free information out there now, like this webinar. Use this time to invest or go in and get the information you can so that you are prepared to be that person or to be that entity that people call on as we move through COVID because there's a lot of need. I'm getting a lot of calls now. And so make sure that you do that. Kwame, thank you so much. I want to thank again VBM Co. and the CRA Bankers Forum.